What's up, traders? Welcome back to another market outlook. We're going to be covering the last week of October. We're going to look at what happened this week, what potential trades that you could have taken, and basically any opportunities that we did take and opportunities that we did miss, and just breaking down the week in general and basically what I'm looking forward to next week. All right, so let's get straight into it, guys. Let's not waste no time. So first thing that I want to say here is the market opened up kind of crazy. All right. Sunday we opened up and we gapped higher. Now, honestly, guys, I was expecting the market to try to fill this gap early on in the week. So I have this line right here. That's why I have this line right here, because you can see this gap is still not filled, even though that ES went ahead and went lower and we kind of got into that gap here. ES looks like it wants to fill this gap completely. So that might cause us to come lower. Well, that will cause us to come lower here on NQ a little bit more, which is great. Trust me, that is no problem. I want this market to actually sell down a lot more. Let's come back into some structure. Let's come back into something that where we have clear liquidity points, clear areas that we could target. I don't like trading the market at all-time highs. I'm not sure who does, but I don't like trading the market at all-time highs. You're crazy if you do. All right, that's just my opinion. But yeah, so we had this crazy gap going towards the upside on Sunday when the market opened, and we just kept going higher and higher and higher and higher. All right, so let's go ahead and start here on Monday where the market opened. Start new, market open 9:30 here. And I remember Monday I did not take any trades, but on Monday here, what you can see what happened is market open right here, 9:30. We did come lower and create a swing low underneath these lows right here. So we did manipulate these lows right here. So there's liquidity. Right, there's that liquidity manipulation right here. After that, the market kind of just stalled a little bit here until 10. Wasn't looking for any entries. And we actually went higher first. So we went higher first. Boom. Higher first. And we ended up taking out this high, and then we gave an inversion right here. Now, if you would have executed this trade as soon as you seen this inversion, right, you could have gotten at least a 1-to-1 here. So this would have been a break-even trade for me if I would have executed. Now, honestly, I did see this, but I didn't execute it. I didn't have enough time to execute it. By the time that this confirmed, the market was selling off, right? That inversion happened so fast, and we just kept selling off, so I didn't have time. As soon as I was about to press execute, the market kept moving, so I was like, you know what? Nah, I'm done. And we were already near liquidity. I was like, nah. But after that, I ended up not trading for the day, but there was an opportunity on this day that I did miss out. Got off the charts a little early, but it's a 5-minute somewhere here. Where is it at? Here it is. See, this happened kind of very late in the day, towards 11. We have a nice 5-minute right here. And you can see the market comes and gets into that 5-minute. I chose the wrong thing here. Market came and tapped into that 5-minute right there. Let's go down to the lower time frames even more. What you're looking for is an inversion. So I believe this was like a 2-minute inversion when I looked back at it. Nope, no 2-minute. It was a 1-minute inversion. I think we had SMT here as well. I'm not 100% sure if we do. If we did, then that made this even better. But you can see that the market initially created a swing low here. So we do have a liquidity sweep. It's a small liquidity sweep, but we do have it. And then here's your inversion. Clear inversion, clear displacement, clear candle that clearly invalidates this gap right here. Boom. And there is your entry, stop loss underneath the low of this candle, right? That shift candle. And I mean, you can target a 1 to 2. You could target whatever you want to target, but you know, guys, I usually target 1 to 2s. But play this a little forward. Market bounces around for a little bit, and then we end up hitting that full 1 to 2. So you wouldn't have gotten break even here. I believe I would have went break even around a 1-to-1. So around right here, and you can see that the market would have missed the break even just by a little bit. Could have gotten break even, could have not, but either way, you guys can see that this was a successful trade. Okay, so that was Monday. Tuesday, I believe, and then the market just kept going higher, right? Market just kept going higher. Tuesday, let's look at Tuesday here. Remember, it got a little bit foggy on Tuesday. Tuesday has to be around here. Yep, this is Tuesday. I see it. Tuesday just looks terrible, and I think I didn't trade on Tuesday, honestly. Nah. Look at this, guys. Look at this. Yeah, that was Tuesday, by the way. And you know what's crazy? Let me see this. Because there was something, I believe it was Wednesday this happened, yeah. Excuse me, guys. Thank you. Whoever said bless you, but excuse me. Okay, so yeah, Tuesday I didn't take any trades. You guys can see obviously why. Right? Nothing to do there. Wednesday was FOMC. And I know a lot of people don't trade before FOMC. But Wednesday, let's look at Wednesday and see what opportunities we could have caught on Wednesday. Because I do believe there was a short opportunity on Wednesday, actually. Yep, here it is. So we got some nice liquidity here, which is, boom, London highs. Let's fix that up, boom. London highs as our nice liquidity. And what are you looking for? You're looking for an inversion. I believe this was a 2-minute inversion. Yep, there it is. 2-minute inversion. Now this 2-minute inversion ended up not confirming until like down here, which is terrible. But just going down to 1 minute, I want to see something here real quick, guys, because I want to see. Or yeah, even this 1 minute right here didn't even confirm yet. Ooh, that's a. I'll say yes and no. Yes and no to that one, and then we have another 1 minute right here. As this is our swing, so definitely the 2 minute would have been what I was looking for here. And you can see we barely closed it, so we did close technically. Yeah, we did close technically. So your execution would have been right here. You guys know we like a little bit more displacement as far as like looking for that, but technically we did close here, and this would have been a break even off of that first entry. But you guys can see, oh, actually no, we hit the full 1 to 2. Never mind. We hit our full 1 to 2 right here on Wednesday. Go on to the 1 minute time frame. Yeah, but that was Wednesday. But you guys can see the market ended up selling off a lot more. I'm not sure if there was any other opportunities on Wednesday. Let's see. We have a 5 minute here. I'm trying to see if we get any 5 minute continuations on Wednesday. Maybe right here. I want to see what this looks like off of this 5 minute. Let's go to the 1 minute time frame. It's 11. Oh, it's already past our trading time anyways. It's 11:30. It's past 11:30. So by then, honestly, if you didn't catch this first move right here, I'm not sure if we came into anything up here. Doesn't look like it. Yeah, if you didn't catch that first move, this would have been honestly the best entry, just off of the sweep of London highs, looking for that inversion. You guys know, target all of these low resting lows right here, and that's it. That's the model right there. So boom, that was Wednesday. Didn't trade on Wednesday. Thursday, I believe I took an L. Thursday, I believe I took an L. Let's see. All right, Thursday. So on Thursday here's what we did, guys. We went underneath this low right here. Boom, we went underneath this low, liquidity, and we went underneath some other lows down here that I want to see which one was it. I think it was, there it is, London lows. So we swept both London lows and that previous low right there. Boom. Look at that. We swept all these lows. Here's your inversion. You guys know I tell you look for the highest time frame inversion. So in this case right here, look, I was looking for this long and I was thinking about taking this long. But these huge 5 minutes here kind of made me hesitate in order to take this long. But I mean, if you would have executed off of this first IFG right here, this huge IFG right there, entry going right there, stop loss going underneath this second candle right here, you would have easily hit your 1 to 2. Okay, you would have easily hit your 1 to 2. Now, like I said, I do teach taking the highest time frame inversion. This is more of a discretionary trade. You're really gonna have to have more confluences in order to take a trade like this. As far as like, you have the confluence of liquidity, which is the biggest confluence. Taking a trade like this has to be prominent liquidity, meaning it has to be London lows, Asian lows, previous day lows, previous day highs, you know, something huge where it is very prominent liquidity for you to take this, with just disregarding those 5 minutes. And if it's not that, honestly, if it's just like, you know, some random lows, you know, equal lows or something like that, I would definitely not, you know, practice this a lot, but definitely wait until prominent liquidity, like previous day lows, London lows, Asian highs, Asian lows, session lows, all of these liquidity points, weekly highs, weekly lows, 4-hour highs, 4-hour lows. You get what I'm saying? These higher time frame liquidity points, when they get swept, you could probably take a discretionary trade like this. But don't get too comfortable to the point where, you know, you're taking this off of random areas. Okay, that's the main thing. But this did work. There's a lot of times that this happens, and this is why I'm mentioning this, is because I see this a lot where the market will create a heavy selling pressure, and inside that selling pressure will have like a huge 5-minute gap, and I'll miss an entry because I'm waiting for the market to inverse both these gaps. And you can see by the time that happens, you already missed majority of the move. So that's something that I'm kind of looking into a little bit more, and creating like a discretionary rule where we could execute these type of trades, disregarding this, depending on what area the market is into and what the market is doing at that area, and if it's a prominent area for the market to reverse from. Okay. Now, I know some people probably took shorts here. Now, I was looking for both sides of this, and I don't know where I took this L at today, but I took an L somewhere here. So, no, we tapped into these 15 minutes here. Honestly, the market gave a nice retracement and we swept liquidity. So I was expecting us to go a little bit higher on this day. Don't know why, but I was just expecting it. But I think this is where I actually took my L here off this 5 minute. Yeah, off this 5 minute that was created going towards the upside after sweeping liquidity. I assumed that we were going to continue going higher. Just drawing my fibs out as well. We swept liquidity at this low. I drew my fibs here. We were at the 70. As you can see right here, we're at the 70. And then we were inside of this 5 minute. And I believe I took, where is that inversion? There it is. You guys can see it right here. It's just huge inversion here. I end up taking that trade. Executed here. Stop loss was at these lows right here, and you guys can see I did get stopped out. We did get some profit, but I ended up getting stopped out before we reached that break-even point. So yeah, that was Thursday. That was the only trade I took on Thursday, honestly. And then Friday, which was a nice day. Friday was a nice day. If you knew what you were looking for, which we should know. So on Friday, see, on Friday, right here, okay? Right here on Friday, I'm gonna put this at like 12. Okay, right here on Friday. Okay, so you can see the market opens up right here, and look what we're doing. We're selling off, The market is selling off, and where are we selling off into, guys? We're sweeping London lows, we're sweeping Asian lows, we're sweeping all of these lows. Now, going into the higher time frame, what else do we have up here? We also have a huge 15-minute gap, right? This huge 15-minute gap. You can see from yesterday's price action right here, where the market opened, we have this huge gap that takes us to the upside, and we have all this liquidity. Market taps into that 15 minutes. So what I'm looking for is a V-shaped recovery inside of here. Now, going into the lower time frames, what do you see the market doing? The market is building an accumulation, right? Market is building an accumulation, right? We are accumulating, we're accumulating. We're failing to displace lower, and you guys can see like this shorting, right? The sellers are failing to continue the bearish pressure, and you guys can see that we are creating this accumulation, right? That rounded bottom that we are creating. Now, the trade that I actually took was after this sweep right here, this last one. Because you can see inside of this, there's no inversion here. There's no inversion here that we took in. So this right here, this manipulation lower, and then you see you have that 1 minute right there. there's your confirmation of the inversion. Stop loss can go underneath this shift candle since we have it right here. And then you can see the market ends up going higher, getting you that full 1 to 2. That's the best thing you could have taken that day, honestly, as far as, you know, this buy for a 1 to 2. Now the shorts, there were shorts as well, because I want you to see where the market got into, guys. This is not random. These areas are not random. Look, we have a 5-minute bearish gap right here, right? And look how the market gets into this gap. And the market gets into this gap at first and we generate this wick. And then after that, boom, right? We sweep this. The exact same thing happened down here, guys. The market got into what? It got into that 15-minute that I showed you guys earlier. And we established a low. We swept that low. We gave inversion, went higher. Now look what happens here. Market gets into this bearish gap right here. And what do? We sweep this high, right? We sweep this high and then we give our inversion. You can see that inversion happens actually on the 5-minute time frame. You go to the 1 minute here. You don't see anything in here on the 1 minute, right? So the 5-minute right here was that time. Boom. Market clearly disrespects this bullish gap right here. So if you're looking for shorts on that day, boom, you execute your short right there. Stop loss would go at the high right here. Boom. And you easily got a 1 to 2, right? Quickly. Easily got a 1 to 2 quickly. You can see the market generate this wick. I think that's when stuff started going a little bit haywire. Probably some news came out, but honestly, if you would have held this trade, it's probably a lot more than this. Yeah, like a 1 to 12 in total. If you're holding it, most likely you're not holding that. Guys, don't try to go and chase these huge RRs. You don't need them. You just need consistent 1 to 2s, 1 to 3s, maybe even 1 to 4 if you want. But just look for low RR that's consistent, right? You want consistency, consistent targets, consistent hits. Okay. And that was pretty much the week, guys. Not the best week, not the worst week. It was all right. I'm glad the month of October is done. The price action this month has been kind of crazy just because of the stuff that's going on in the economy right now. It's just a lot. The government being shut down and, you know, Trump tweeting every second and doing all these extra stuff. So the month of October has been kind of slow. And then we're at all-time highs as well. So it's just, you know, this is not, for a beginner, this is not the best markets to come into. I will say that. But we adapt to these market conditions. We don't complain. We adapt to the market conditions and we find the way that we need to trade and adjust ourselves. Okay, that is the best way to go about it. Now, the market still hasn't opened yet. It's still early. I know we have these lows right here. To be honest, I don't want to draw anything out because you guys seen what happened last week, right? When the market opened, we gapped. So I don't know what's going to happen now. But what I will say here is what I want to see as far as going into this week. I am really hoping that we start heading lower and get into this gap. Let's just fill this gap, because I am not going to be comfortable buying this market to the upside, especially since we're getting so close to this gap right here. I'm pretty sure the market's going to want to come and fill this gap before we get any more impulses to the upside. And honestly, guys, I wouldn't even mind if the market really like sold off for a little bit. Let's start creating some selling structure towards the downside, right? That way we're leaving liquidity at highs and we have liquidity at lows. That way we can come back into areas where we'll have more structure to trade. You get what I'm saying? I want the market to kind of leave all-time highs and get away from all-time highs, honestly. But that's pretty much it for this market outlook, guys. Pretty simple, pretty straight to the point. Let me know if there was any trades that I missed that you guys took, or any trades that you probably lost on, and ask why didn't I look at it, or why didn't I see a trade, or whatever the case may be. If you have any questions, any concerns, please let me know. I will see you guys in the next one. Peace out.